Thank you for joining us today. We hope that after watching this presentation, you have seen how we are more focused, more disciplined, and more competitive while we provide the energy which the world needs today and in the future. Today, Ben and I will be answering your questions. And just before we kick off, Ben, I'm realizing this is your last quarter.
Yes.
You have been our CEO for some 9 years now, and just an incredible, incredible career. It has been such an honor to work with you, and you've seen us through both the BG deal and the difficult times of COVID as well. And you've started us on that transition to the next step. I have enjoyed so much working for you. Thank you.
Thank you very much, Sinead. So did I.
And now, back to the main part. Could we please just have 1 or 2 questions each so everyone has the opportunity? And with that, could we have the first one, please, Dan?
Our first caller is Ron Busso from Reuters. Please go ahead.
First of all, I wanted also to congratulate Ben for stepping down CEO after 9 years. I think I started covering Shell when you just took office, so it's been a hell of a ride since. And thank you for your patience over the years with me. And best of luck in the next step. And good luck, of course, to Wael. Going back to results, I wanted to ask you about the LNG division, which is really a big part of your legacy. Its performance was again weak in the quarter. I mean, and you might not like this, but if you compare it to Total, it raises the question why Total had done so well in trading when Shell didn't, and why the segment's earnings were down while Total's were sharply up. So that's kind of my first question, thoughts on the LNG division. And the second question is about windfall taxes and your expectations for them in Europe and Britain going forward. Thank you very much.
Thanks, Ron. I'll take the first one on LNG, and Ben, if you don't mind, the windfall taxes. Indeed. So thanks, Ron. I won't comment on peers or competitors, of course. So what you're referring to is $2.3 billion of earnings from our IG business. And when I take a step back and think about our integrated gas business, I need to remember that it occurs across many, many quarters, and it is an incredibly enviable position that we have. What we saw this quarter coming through was, and I'll talk about the frame that I look at our results on. I look at it from the point of view of seasonality, supply, and then dislocations. So what you saw with our integrated gas business this quarter is that from a seasonality point of view, we're really geared up to the winter months for Northern Hemisphere. So in Q3, you traditionally see us not having as much length, a little bit shorter as we come into the winter, and you see that lengthen as we go into Q4 and Q1. The same occurred here. We also then talk about supply, and of course, as you well know, we did not have the supply that we wanted from Prelude due to the industrial action. That, of course, is now corrected for, and you'll see that change coming into Q4 as well. And the final one is really about dislocations. As you know, Ron, we tend to hedge. It's very rare that we would not hedge some of our positions, and what you see there is very simple. Typically, you see JKM higher than the European market, and with everything that's been going on, you've seen that flip. So the hedges were less effective than we would have wanted this quarter. But fundamentally, really strong business. And of course, if you look back in terms of where we were in terms of Q1, we had fantastic results then. And I'd like to remind you, of course, what we have been doing very much this quarter is making sure we get the cargoes into Europe where it has been needed most. So as you know, we've been focused on delivering that supply. And in fact, we've actually ended up with more than twice the number of cargoes that we would traditionally have in the first 9 months of the year into Europe. So this is about making sure that we do the right thing for Europe. Over to you, Ben.
Yeah, thanks very much, Ron. And can I also say thank you for your patience with me over the last 9 years. It has been a pleasure also to work with you. Well, on windfall taxes, well, a lot of people would say, high prices, the best remedy against it is high prices. But the reality, of course, is with the prices that we are seeing today, is that many, many people in society, particularly, of course, the most vulnerable, are suffering very badly as a result of it. So I think it is only sensible. It's a societal reality that of course, governments intervene and alleviate the pressure on those who need that alleviation most. And it's, I think, therefore also a societal point we have to accept that governments will raise taxes for that. And therefore, I think we should be prepared and accept that also our industry will be looked at for raising taxes in order to fund the transfers to those who need it most in these very difficult times. That is my point. And my point was also when I made the statement earlier on, we should not be surprised. We should be, of course, helping governments to design the right policies. And of course, there's many different ways in how you can design windfall taxes, special levies, solidarity contributions, etc. And I think we should be at the table to make sure that these designs are correct and appropriate. For us, of course, there is a special levy in the UK already. There is talk about special levies in, for us, important countries like the Netherlands, Germany, Italy. It's not yet settled on how that will play out. But we are ready and we are actually engaging with governments to see how that will play out. And I expect it to be in place somewhere in the course of next year. Thanks, Ron.
Thank you. Dan, next question, please.
The next question is from Eva Schuten at New NL. Please go ahead.
Hi, good morning, Ben. I have a question for you, and it's sort of on the personal, because you're leaving as CEO after 9 years. What would you consider to be the highlight and the biggest challenge over this period?
Well, thank you very much for that question to reflect. I take it. I'll take it.
You're definitely taking
Jeanette.
that one.
But it has been indeed quite a turbulent time, and a lot of people have remarked on, well, you know, wasn't that tough, that 9 years of more or less constant turmoil. I actually consider it a blessing because it made for quite a consequential period as well. So the things that I'm proud of are the way we have transformed the company. Of course, the BG acquisition did an awful lot, but as a result of it, we have significantly high-graded the portfolio. We sold about $80 billion worth of assets on the back of it. But in the end, financially, the company is incomparably stronger with 65% higher income, 3 times the free cash flow, very, very strong cash flow in general. But we run the company with lower cash outgoings, 40% less capex, 10% less opex. So the company is financially very strong. And I'm proud of that, not just for me, but for what the company has achieved. Operationally, also strong. 1/3 less of the emissions in our own operations. 80% less process safety incidents compared to when I started. Really results to be proud of. But also, I think organizationally, we have a higher female representation in our ranks than ever before. We are at 1/3 in the top 1,200. It was 17 when I came in, 17%. And of course, we have the highest Shell People Survey results ever. So good things to look back on, and I do. And on top of it, of course, everything that we have done on carbon. And that may be another point of pride, the fact that we have been and are still the leading company when it comes to carbon management in the industry. But there's a few regrets as well. And it not in the sense that I made the wrong decisions, but more often that I made them perhaps with the benefit of hindsight a little bit too late. And I'm sure you will have followed the parliamentary inquiry on Groningen, where I said, well, I wish that some of the things that we had as emerging insights in 2015, I had acted on earlier than rather wait until 2017 to act on them. And the other thing that I think is a regret is the Arctic. In the end, we went out of it. But with the benefit of hindsight, I look back on it and think, couldn't I have done that earlier and faster? So a mix of pride and regrets, but I suppose that's always the case after 9 years. But anyway, thank you for the opportunity to set this out to all of you.
Thanks, Ben. Dan, next question, please.
Our next question is from Jenny Strasbourg at Wall Street Journal. Please go ahead.
Hi. Thank you. Just curious given the current warmer than expected weather, the seasonality effect on the supplies of natural gas and pricing, I'm curious how you see clients responding and in your own chemicals utilization, your own natural gas utilization. And then I also wanted to ask secondarily, looking past this winter, Ben, what is your outlook for long discussed LNG long-term contracts in Europe, given that there's been so much discussion about this and you've talked about it a lot and, looking through to 2026, but they haven't so much materialized? Thank you.
Okay, thank you, Jenny. I will take the first one, Ben, and please feel free to build, and then we'll pass to the second. So indeed, you were talking about specifically, where we are in terms of the winter and potentially a warmer than potentially expected side of things. Well, I think that's still to be seen, and we're still very early on in that aspect of it. Europe, of course, has been building storage, and we've been part of that as well, where they've been filling storage. But we need to remember that storage only works for a certain percentage, and then will have to continue to be refilled, particularly as the winter plays out. So a few concerns there on our side at all. So we're very much ready to go in the sense that we have a storage position built. On top of that, you mentioned, Jenny, the comment about how are we seeing our own demand and utilisation of gas. We've very much made sure that we have stepped back where we can. We've used alternatives, and you've seen across, particularly our refineries, across Europe, but elsewhere in the world, more than a 40% reduction in our own gas usage as well, which is making sure that we play our part in making sure the gas goes to where it needs to be as well.
Yeah, and Jenny, on LNG, the long-term outlook and long-term contracts in Europe, I think quite positive actually. We've always said we see LNG as a long-term growth segment of the natural gas business. And we said typically think of 4% per annum growth. And I think that number can only be higher, and certainly of course in Europe, as you've heard from Sinead, we've seen tremendous step up in LNG consumption in Europe. And on the back of that, or in parallel to it, we have been stepping up also our positioning in LNG. So just over the last few quarters, we have collectively between Northfield South, Northfield East, some other things that we have done in Calcasieu and in Mexico, we've signed up 8 million tons of new supplies for our portfolio coming on stream in the course of this decade. And we are very confident that LNG, of course, is going to be needed. And also you will have seen that we have started commissioning a new LNG import terminal in the Netherlands, in Eemshaven. And that is, of course, on the back of the confidence that we have in there being a long-term demand for LNG in Europe. And indeed, some of these long-term demands are in the form of long-term contracts as well. So yes, we stay with our confidence in the sector, particularly also in Europe.
Thank you. Thanks, Dan. Can we have the next question, please?
The next question is from Tom Wilson at the Financial Times. Please go ahead.
In response to Ron's question, where you talked about windfall taxes, can I just ask you to just be a bit more specific? So, in terms of the UK Energy Profits Levy, in your view, is that sufficient to tax the sector? Or when you talk about being sort of open to higher taxation and being engaged with governments about additional levies, are you talking about that levy specifically? So would you be open to a renegotiation of that energy profits levy and kind of increasing that to the upside? And are conversations like that happening? So that's the first question. And the second question is a broader one. And the energy crisis this year has forced, or it looks like it's forcing if not a reset, a rethink about global energy policy, particularly in Europe. And Ben, you and I have spoken in the past, and you've indicated you've had more conversations like that than you potentially have had at any time during your 9 years as CEO. So given that those conversations are ongoing, I'm interested to know how you would like energy policy, how you think energy policy should be rethought as a consequence of this crisis, and as governments have defined new energy strategies to come out of this crisis, what do you think those strategies should look like, particularly in terms of the emphasis on hydrocarbons versus new forms of greener power? Thanks.
Excellent. So Ben, the first one, follow up to your previous one on windfall tax. If you take that, I'll actually take the second one, please.
Yeah, I think it's very simple, Tom. Taxation is the prerogative of governments, and we don't negotiate with them on taxation. But I'm perfectly okay to stand here and say, well, it's a societal reality that we have to work with governments to perhaps design the right structures for windfall taxes. And that's what we are doing. Also in the previous levy, we've had the discussions and say, well, make sure that you at the same time continue to encourage the industry not only to invest in more oil and gas production, but particularly also to invest in the transition to greener forms of energy. So I think it's good that we are part of that discussion, but that's not a negotiation. And I leave it to government to decide how to balance their books. But let me leave it at that.
Thanks, Ben. And actually, I think, Tom, it's fair to say a very similar answer to your second question in terms of really about how government policy should play out. I mean, this is about the importance of the energy trilemma, making sure we cover both the supply side, the sustainability element, but very much so the affordability. And it's a difficult conversation that's going on. We're very much at the table. We're engaging with governments around the world, as Ben has alluded to in previous calls as well. We're here to ensure that we can help as required to be able to explain the realities. And we're very much clear that what we want is a balanced set of policies that think about not only today, but also any consequences for tomorrow as well. And in the meantime, what we're really focused on is playing our part, getting energy to where it needs to be. And that's what we've been discussing. Those cargoes coming into Europe, double where we were before, making sure we play our part in import terminals and taking some of the capacity of those, making sure we sign up to new deals in renewables, which will be there for the future as well. So I think I'll stop there, Tom. Thank you. Dan, could we have the next question, please?
The next question is from Will Mathis at Bloomberg. Please go ahead.
Good morning. Thanks for taking the questions. Just first, I wonder if you could talk about your expectation for oil prices heading into next year. And also, there's already been some concerns raised about gas supplies for next winter, that, this winter in Europe, storage is quite full, but next winter is going to be even more difficult. What's your expectation? Do you think there will be enough supplies that can come in to fill up Europe's storage again after this winter? And if not, what do you think is going to happen? Thanks.
Okay. Thanks, Will. Ben, may I ask you on oil prices? I've heard you on this one a few times, and I'll comment a little bit on the gas supplies.
Sure. Well, thanks, Will. And, I've always said it's very difficult to talk about oil prices because it's of course a commodity that follows a lot of different inputs and therefore can be very volatile. I think today's environment is probably turbocharging that argument, and therefore it would be very difficult to just say, well, expect this or expect that. I think we can all look at the environment around us, and the only sensible conclusion to draw is that it's going to potentially be a very volatile ride again or once more. So what we need to do as a company is to prepare for that volatility and of course make sure that we are robust, resilient, balance sheet wise, but also that whatever projects we undertake or whatever business we undertake is resilient in a whole range of macro outcomes: oil prices, gas prices, refining margins, etc. And of course, where we can, we have to take that volatility also as a source of income. Because we are pretty good at understanding the dynamics in the market and pretty good also positioning for some of that volatility to not only help and supply in that volatility, but then also take advantage of the opportunities that the volatility offers. But what oil prices and gas prices are going to be, for those of you on the call who still have that question in the back of their mind, it will be impossible to give a precise answer.
Indeed. Thank you, Ben. In terms, Will, you asked about gas supplies, and I think you bring out an important point. This isn't just about this winter. This is also going to be an issue for next winter as well, and that's key. I've been very impressed to watch how the EU has managed to fill the storage as required for this winter, acknowledging the fact that that covers only a certain percentage of what will be actually needed this winter, and more will have to continue to come in throughout the winter. But of course, during this period, we've also seen flows from Asia into Europe, helped by the fact that, of course, China has had a zero-COVID policy as well. How that plays out in the next 6 months, 9 months, will be very important. But at the same time, what we're seeing is the EU requesting or mandating a reduction in demand of some 15% by April 2023. So that will also play out if it is successful in implementing that across the countries. So that will provide some form of leeway, whether it is sufficient for next year as well. So thank you as well. Can I have the next question, please, Dan?
The next question is from Emily Gosden at The Times. Please go ahead.
Morning. Thank you very much. Two questions, if I may. The first is, how much extra tax did you pay in the third quarter as a result of the windfall tax or energy profits levy in Britain, please? And secondly, to Ben, as others have said, you've been very generous with your time over the years, so thank you for that. And on that note, all the way back in 2016, we did an interview where you told me that people wanted you to invest $15 to $20 billion in wind and solar, but you wouldn't be able to pay a dividend if you did that because wind and solar companies didn't make profits. As you look today, could you envisage Shell spending that kind of sum on wind or solar, perhaps through an acquisition? And is a bigger move into renewable generation something you wish you had done sooner? Thank you.
Thanks, Emily. I'm definitely leaving one about 2015 to you, Ben, and I'll talk about the extra tax side of things. So it's a great question, Emily. We've seen, of course, the UK side, so the energy profit levy coming through, and then we've also got what is playing out in the rest of Europe as well. In the UK side of things, we've been heavily investing over the last couple of months in effect making sure we get Pierce up and running. So we've had a heavy investment program, so the refit to get gas into the UK quickly. So there's been heavy capex for us there. We're also, of course, kicking off on Jackdaw as well, coming through, and finishing off the DNR projects, which we've had in the North Sea as well. So from that point of view, heavy capex, which has meant we haven't had extra tax coming through in this quarter yet. I do expect to see that extra tax or that tax-paying position to happen probably quite early in Q1 2023, but we'll see, of course, what plays out with prices as well. Beyond that, what I have seen, and you'll see in our quarter having played through, is that we've had a hit of 400 million on our deferred tax liability in the UK because of the windfall tax or the energy profit levy. So that's also come through. If I then swing across to Europe, because you were also implying in terms of where else, Emily, on that, what we've of course seen is everything in terms of the windfall taxes and the different solidarity contribution playing out in the EU. That has not been enacted in the third quarter. So we have not seen that hitting our books yet, but we expect to see that play out as each of the individual countries enacts their version of it as well.
Thanks very much, Sinead. Thanks very much, Emily, and also thanks for your time over the years. Going back to 15-16, I think at the time when we talked about investing in renewables, it was very much in people's mind, why don't you buy a solar panel firm, or why don't you go wind turbines? I still believe that that was the right choice not to do that, because indeed the margins in these businesses are challenged and it's not a business model close to us. But what we have done, of course, since is to invest with these types of tools in the energy business, so the renewable power business and everything that hangs off it, like, for instance, green hydrogen and also what we can do to package power products in sophisticated ways. And if I now look back on how far we have come, so this year we will be investing about $4 billion in RES. Now that falls a bit short of a double-digit number, but I think we will continue to grow our investment in this space, and by the way, also in low-carbon fuels. But it will be value-led, and we will go into those areas where we know the business models are de-risked, or where we can take sort of intelligent risks ourselves, all with the view that we need to build a profitable business that is free cash flow positive, and that will be a contributor to the dividends in the medium to longer term. So yes, I can see this is a growing part of our investment portfolio. It has been, it will continue to be. I will not make any statements on M&A, we never do, and that will probably also not be for me to consider anymore. But anyway, thank you very much, Emily, to you as well.
Thanks, Emily. Dan, can we have the next question, please?
The next question is from Joel Hills at ITV News. Please go ahead.
Just to pick up, please, on, I know you've been questioned a lot about the tax situation in the UK, and I'm afraid I'm going to return to it. If I've understood what Sinead was saying there correctly, am I right in thinking that you do not expect to pay the energy price levy for the rest of this year? Can I ask you also, do you think that's an example, Ben, of a windfall tax that is well designed? And do you think there's a case it was designed in May, of course. Do you think, given what's happened since, there's a case for the UK government making that tax more exacting, please?
Okay, thanks, Joel. I will just clarify first and then pass to you, Ben. So it simply comes down to whether or not you make profits to be able to pay the tax on. So because of the investments that we're making, as I alluded to in terms of the North Sea, etc., we simply are investing more heavily than we have, and therefore we don't have profits of which we can be taxed against. So just to clarify on that one. I recognise it was a question very specifically to Ben in terms of effectiveness.
Well, I think, again, it is up to government to decide the effectiveness from a sort of revenue-raising perspective. But if the design was to tax companies like us, but then to also incentivize us through investment allowances to invest more or faster into either legacy or new energy projects, then yes, you will have that effect, that indeed it will eat into the amount of tax that we pay at the end of the day. But that is the result of us investing in energy security for the country. Again, it is up to the government to decide whether they got that balance right. That is how it works. In principle, I would say, a tax system that incentivizes people rather than to just tax people is a good design. Whether it meets all the requirements of what the government needs is for the government to decide.
Thanks, Joel. Much appreciated. And Dan, can we have the next question, please?
The next question is from Stanley Reed at the New York Times. Please go ahead.
I just wanted to ask, there's been a lot of reports about LNG tankers being backed up around Europe, especially, I think, off Spain. I wondered if you know, how you analyze the situation, and do you think it's a short-term phenomenon or a sign of you know, kind of bigger problems in the system, receiving gas and so on?
Thank you, Stanley. I'll take that one. With respect to that, you're correct. There's been a lot of reports in the sense of tankers around various coasts in Europe, and particularly, as you said, Spain. So I think Europe has had to react very quickly to make sure it ensures that it has the capacity to both land the energy that it needs, but also to regas it and get it to where it needs to be. What are we doing from that point of view? We are ensuring that we have access to where we need it. So for instance, in Spain, 6 of the terminals, we have access in there. We have, of course, as Ben alluded to earlier, played a role in terms of taking significant capacity in the new terminal, of course, that came through as well, Stanley, in the Netherlands. So we're making sure we have access where we need it. We're 70% of the access into the UK through Dragon. We've got Gate in the Netherlands. We have our strategic positions across Europe to make sure we can do that. Now, with respect to that, you also then said, is this about a position or a difficulty for the future? Well, of course, the issue is always you can only get the gas to where it needs to be if you have to those access points. Europe is moving fast. We see Germany, of course, trying to get up, a series of floating terminals as well, and that's what we expect to see. So good progress across the EU. The cargoes that are sitting there at the moment are ready to go for the moment at which it is needed. And of course, storage is sitting quite full at the moment. Yeah. Good. Thank you, Stanley. And Dan, may I ask for the next question, please?
The next question is from Graham Hiscox at the Daily Mirror. Please go ahead.
Good morning, and thanks for your time today. It's actually a very quick clarification, if you don't mind. I think this is for Ben. You talked about how you were engaging with government. This is a UK-specific question, and that you expected some form of new taxation. I think you were saying to be in place, but in the summer of next year. Can I just check that? And can I just double check that? Are you actually actively engaging with the Treasury in the UK about the design of any additional taxation? Can I just clarify that? Thank you.
Yeah, thanks very much, Graham. Well, we have spoken with the government many times in the lead up to the levy that was being put in place by the then Chancellor earlier in the year. I am absolutely certain that we are indeed in continuous dialogue with the Treasury on these matters in a constructive way. But not me personally at this point in time. I would imagine that moment may still come, but of course I'm also very mindful that it's a very busy time at this stage for the government. For next year, I'm not sure what you were referring to there. I don't think I have predicted new taxation to be in place. What I have said is that it is a societal reality that governments, rightly so, and for the right moral reasons, help the most vulnerable in society, and that they will be looking at companies like us, who benefit, of course, from the volatility and the prices that we see, to fund the programs that they are rolling out. I think we have to accept it and we have to embrace that, and that is what we are doing.
Thank you, Ben. Excellent. Dan, next question, please.
The next question is from Ryan Duss at Energy Voice. Please go ahead.
Hi, I was just wanting a couple of updates on some North Sea assets, if you could. So the two I'm wanting to ask about is, first of all, the Penguins FPSO. Have we got a sail away date for that? And the Pierce reinjection project, it was set to have first gas by autumn. And I was just wondering if we have experienced first gas. And then my second question was on the Cambo field. Can you confirm reported sales process of Shell's stake in the field? Thank you.
I'll take those if that's okay, Ben. So a couple of things there about the North Sea. Thank you, Ryan. So with respect to Pierce, indeed, we had talked about hoping to get first gas through autumn. We're still expecting that by year end. We are slightly delayed on that, but looking good so far. With respect to Penguins, we have not announced a sail away date on that, so I won't comment further on that, but progressing well. With respect to Cambo specifically, I would say that nothing has changed with our view to Cambo. It remains uneconomic from our perspective to be able to follow through on that, and we're looking at our options around that as well. So I'll keep it short on that one. Thank you, Ryan. Dan, may I have the next question, please?
The next question is from John Mannering at Argus Media.
Hello. First of all, I'd like to give you my best wishes for the future, Ben. My questions are about gas and the energy transition. Because of energy transition policies, European governments appear to be resistant to signing up to the kinds of multi-year, sometimes decades-long LNG contracts that some Asian governments have signed up to. So how can a major energy company with a sophisticated integrated gas operation help European governments secure the gas they need in the near to medium term, going out to 2030? What do you need from European governments so that they can help you help them? That's my first question. And the second one is, how do you see Europe adapting to its energy transition policies, particularly with respect to gas and blue hydrogen through to 2030 and beyond? Thank you.
Okay.
Yeah.
Happy to take both.
Well, thank you very much. Good questions, John. And indeed, you're absolutely right. There has been a period where the EU and Europe in general has moved away from long-term contracts. That was for purposes of market liberalization, etc., etc. And indeed, you're also right, is that of course, in a way, stands in the way of signing up LNG supplies from resource holders outside Europe. Where do we come in, or where do we help? We can actually take a portfolio approach, and that's what we have been doing. We have been supplying Europe, of course, in the past, without having long-term contracts. We can warehouse that sort of long-short risk in our own portfolio. Now, I'm not suggesting that we don't need any long-term contracts. In some cases, they can be really helpful. And I think the EU and European countries in general are moving a little bit more towards mid or longer term contracts. But we can really play an important role in sort of bridging the gaps that are out there, both on the supply side with the resource holders as well as on the demand side here in Europe. I think the energy transition policies will have to accelerate. We've always been very clear that the energy transition does not go fast enough. You mentioned hydrogen. Well, hydrogen does not go fast enough. And that is not because there is lack of funding or lack of appetite, etc. That is quite often because there is not supportive enough policies to make these business models come out of the woodwork. So yes, we have a little bit more traction now with governments who want to accelerate the energy transition, to advise them, you know, if you do this, we are more able and more ready to invest. And of course, we have a lot of discussions also on how you can accelerate permitting, because quite often that is a key issue as well. The permitting of new assets, new infrastructure, distribution infrastructure, quite often is the rate determining step by which we can do the decarbonization of the energy system. So I think that will be the focus of European governments, and rightly so.
Thanks, Ben. And thank you, John. Great questions. Dan, may I have the next question, please?
The next question is from Tom Daly at Energy Intelligence. Please go ahead.
Hi, good morning, Ben, Sinead. Two questions, if I may. Firstly, on the Sakhalin-2 stake. So I know the carrying value of that is at zero, but presumably you'd still like some compensation from the Russian authorities for that stake. Have you made any progress in this regard? Also, are you now set to lose the LNG offtake from Sakhalin-2, or are you trying to challenge that as well? And secondly, on COP27, wanted to ask if you're sending anybody to a climate change conference next month, or has anybody invited you? Thank you.
Excellent. Ben, I'll take the first. You okay
Sure,
the second?
yeah.
Yep. So indeed, Tom, thank you for that. With respect to Sakhalin, you're correct. We have brought our carrying value down to zero, so you've already seen that flow through our books. And of course, you've actually seen that across most of our assets going through as well. So in terms of, you know, where are we in terms of, you alluded to compensation, I think is the way that you put it. We're, of course, reviewing all of our legal options, and I won't say more than that. In terms of the volumes that we lift, or the LNG contracts that we have, you are correct that that was part of what we saw play out in Q3, i.e. the Sakhalin-2 liftings have in effect stopped as well. Ben?
Yeah, and on COP27, of course, we are not one of the parties to the conference, so therefore we don't have a formal role to play, and rightly so. But we will always have observers there to see what is happening, and that it's no different this year. So it's not a case of being invited, not invited. We will be there listening in, because it is, after all, the most important topic for society, to understand how we are dealing with climate change and how we accelerate the energy transition.
Indeed. Thank you, Ben. And Dan, can I have the last question, please?
The last question is from Nick Coleman at S&P Global. Please go ahead.
Hi, Sinead and Ben, and thank you, Ben, also over the years. So, first question, please, on production levels and production decline. I think year on year, company production in oil and gas production is down 10%. I think it's 12% for oil, and this is not just about withdrawing from Russia. So, do you see these quite chunky decline rates as a bit of a trend, or is it more like one-off issues maybe in the supply chain? The second question, please. There have been concerns around Northwest Europe about security of offshore oil and gas facilities after the Nord Stream incidents. Has Shell encountered any threats to its assets in particular? And if I could possibly squeeze in a cheeky third question, the IEA World Energy Outlook today more or less restated a fairly tough view that the world shouldn't be sanctioning new upstream oil and gas projects, and sort of it doesn't really approve, it seems, of new licensing rounds as a consequence of that. It's a fairly uncompromising stance, and I wonder about your view on that. Thank you very much.
Excellent. Thanks, Nick. We'll let you have the cheeky three. I'll do the first two, and then Ben, it would be great for you to have the last word, if you don't mind. Yeah. With respect to production decline, you refer to the fact that you're seeing our production come down year on year, and specifically around oil. So there's a few things there. what I would remind you, of course, is it's not just the Russian volumes, as you rightly put, but also, of course, that we exited Permian as well, which is a significant difference between the years. Also in this quarter, I would say as well that we have, of course, Kashagan, we're looking forward to getting back online, a little bit less coming through on that as well. Now, you said, is it a trend or is it a one-off? For me, I'll be very honest and say, actually, I'm less focused on the production volumes. I'm focused on the value that comes out of it. And what you can see very clearly is that our upstream business, particularly given you're referring to oil, is doing incredibly well. And you see it with significantly lower production. So we've moved our focus from a volumetric number to very much a value metric. And that's what we're focusing on, because all barrels are not created equal in that sense. So you've seen us focus and move out of some of the positions which would not be so valuable. And particularly this quarter, Gulf of Mexico is really high margin barrels for us and very much on the value side. And you've seen incredible production. I mentioned it earlier. It is the best production we've seen in a decade coming out. So the Gulf of Mexico is doing fabulously there. You asked about Northwest Europe and security. We have great security measures in place and we're watching very, very closely. Indeed, we hear a lot of noise and see a lot of press reports, but as you can understand, we don't give any details on that. So thank you.
Yeah, thanks, Nick. And indeed, I've taken note of the report coming out. I must admit, I haven't digested it yet. But as always, with the IEA, we take their reports in with great interest. There's no doubt in my mind that indeed the oil demand and supply will peak. And I think they're talking about that being in this decade. Which is essentially in line with our views as well, by the way. But it doesn't necessarily mean that we are not going to need new projects. The decline rates in demand will be much lower than the decline rates we tend to have in supply if you don't invest. So therefore, continuing to invest to meet declining demand will be an important priority. And if we don't get it right, we don't get one of these important legs of the energy trilemma right, which is to have security of supply or affordable energy in the first place. So maybe as a last plea on matters like this, I wish for governments and society to have, alongside a focus on supply, which is crucially important, also a very strong focus on demand, because ultimately it is supply that follows demand, not the other way around. And if it has to be the other way around, we are looking at the sort of tensions and challenges that we are experiencing today in Europe, which is something we really don't need. Thank you.
Thanks, Ben, and thanks for that, Nick. A good way to end. I'd like to thank you all for your questions and for joining this call, and we wish everyone a pleasant end of week. Thank you.